I write the largest, most read cryptocurrency-based newsletter in the world right now. So across all my newsletters, I have about 600,000 global readers. And there is a narrative in the United States, specifically in the United States, but I'm also seeing it all over the world. There's this narrative that institutions have absolutely no interest in cryptocurrency, corporate clients have no interest in cryptocurrency, pension funds have no interest in cryptocurrency, and that crypto is just kind of like this fringe asset that will never migrate to the traditional financial world. And so I'm here in Switzerland, sitting with you and other fellows, to offer an alternative narrative to that. That yes, indeed, banks are interested in this, but no bank wants to be first, of course, but no bank also wants to be last. And I'm talking to the folks that can shed some light on that particular story. So I guess this leads me to my first question. How does AlgoTrader provide the building blocks for traders and banks to tap into crypto finance?
Yes, when talking about that narrative, if you spend more time in Switzerland, you'll notice that the narrative here in Switzerland is a bit different. In Switzerland, we have quite a few banks that offer cryptocurrencies to their clients. More and more banks are jumping on the train. So if you ask people on the street, I think you'd get a different opinion. Now, what do we provide? Basically, when a bank wants to start offering cryptocurrencies to its client, it needs two things. It needs some solution for storage, so for the custody part. That's always first. That's how it always starts. But then, there's the trading. And trading cryptocurrencies is completely different from trading traditional assets. Banks are familiar with standard protocol like the FIX, but that doesn't exist in the crypto world. Crypto world, is very volatile. There is no standards, and we take care of that. We provide that harmonized, standardized interface to the banks that they're familiar with, and hide that entire complexity and volatility of the crypto world. That's what we do.
So it's almost like I hate to use this term, but it's almost a form of plumbing, right? Like a back-end plumbing.
Absolutely.
Right.
Actually, plumbing is the word we use in our marketing.
Okay.
Yeah. We take care of the plumbing. It's also, we have a visualization where, we connect to all the crypto exchanges and the market makers and the brokers, and we call that the spaghetti, and we take care of the spaghetti.
Yeah. So exactly. all your client sees is a traditional trading screen that they would normally see. They hit the buy button. They don't have to worry about all the other nonsense of contacting the exchange and moving things to an address. All of that is handled for them, correct?
Exactly, but it's even more. It's not just a UI. With our integrations, we're partnering with Avaloq, one of the core banking system providers. It's actually integrated into the core banking system. So for you as the end client, what that means is that in your online banking, you will see your cryptocurrency positions, Bitcoin and Ether, alongside your equity positions, alongside your Apple and IBM shares, right? So it's integrated, and that's the goal, to have it fully integrated into your portfolio.
Okay.
Yeah.
And how is that coming along now? How many banks are you working with now, or can you talk about how many banks have approached you to offer this service?
Yes, the biggest showcase we have is the Signum Bank. Signum, one of the first two crypto banks that received a license last year. Signum is using AlgoTrader for their trading. Yeah.
Okay, terrific. So would you say that's the most in-demand service that you offer right now from the banks? Or is it your algo trading software, or is it this kind of integration piece?
Traditionally we have been serving mostly quantitative hedge funds, and automating trading strategies. And over the years we have sort of wandered into the crypto world, and we've seen that with the solution we have, this is a perfect fit for that new demand that banks have.
Is the institutional demand for Bitcoin derivatives increasing in your opinion?
Yes, and that you mentioned the narrative in the beginning.
Yes.
The demand for futures and options is increasing, and that is a clear sign that of institutional adoption. Look at the traditional trading. The trading volume of derivatives is much higher than equities by magnitudes.
Right.
And that is because of the institutions, because of the big hedge funds.
Sure.
We see, we've been serving traditional hedge funds for many years. And what we see now is that traditional hedge funds are also starting to trade cryptocurrencies, and that's a great sign. Until a few months ago, we've only seen those tiny crypto funds with a few million.
Right.
It's nothing. A typical traditional hedge fund is $500 million, $1 billion.
Right.
But now these big guys are starting to look into cryptos as well.
That's super interesting. Now, are they clients of yours? How do you? Because the question I'll get is, well, how do you know that that's actually happening? Or
well, we see it because they're our
Right.
clients, right? They're
Yeah.
using our software. They've been using our software for equities and derivatives, and now in addition to that, they're using it for cryptos. It's small allocations,
Yeah.
tiny 5-10% max of their portfolio, but it's good. They get experience, and for hedge funds, trading futures is easier.
Yeah.
It's some of our clients trade 200 futures market around the globe, right? They trade, any region, any asset class, but they always do it with futures.
Right.
Futures always work the same, and it's easier for them.
Sure. Okay. Can you describe the type or size of institutional clients who use your automated Bitcoin trading products?
Yes, so it's basically the banks what we talked about. So the sell side, they use our software for trading and execution. With execution algo, smart order routing, RFQ, things like that. And then on the other hand, it's the buy side, so quantitative hedge funds using it to trade quantitative trading strategies. It's these two categories.
Can you give me an idea as to the size of those institutions in terms of AUM, assets under management?
Yeah, well, I would say a typical crypto fund today is maybe 10 to 15 million AUM.
Okay.
We haven't really seen any large crypto funds yet, but again, we also see big traditional hedge funds now trading cryptos. I mean, those are typically $500 million, $1 billion. We have some clients that are more than $1 billion.
Okay, so this is super interesting that real hedge funds, right? Because any guy can spin up a hedge fund and call himself a hedge fund manager. But we're seeing real hedge funds, $500 million, $1 billion plus, saying, hey, you know what? We want to get an allocation. We want to get into this space. And they're using your company to do that.
Yeah, some of them are, not all of them, but some of them.
Yeah.
There was this report, I don't know if you've seen it, by Fidelity sometime last year. They did a big investigation, and apparently 20% of institutional investors already have cryptos in their portfolio, and an additional 20% are looking into buy. So that's 40% already,
yes.
right?
And just to be clear to everybody watching at home, that's a very small allocation that they have now, right? They could just have $5 or $10 million, which for the average person is a lot of money, but institutional capital, it's almost like no position, right?
Yeah, but let's be honest. The cryptocurrencies that we see today, that's just the tip of the iceberg, right?
Okay.
It's in the future. It's not going to be about cryptocurrencies. It's going to be the tokenization of real assets.
Right.
And that's why we are here, and that's what all the banks we're talking to, that's what they are interested in.
Sure.
A few years from now, every asset is going to be tokenized.
Right.
The bankable assets we have today, equities, derivatives, but also the non-bankable assets,
Sure.
real estate, art, cars, whatever, and that's what we're here for. So that the cryptocurrencies we see today, that's probably just a small experiment. We're getting ready for this new era, right?
Right.
A few years from now, we're probably not even going to hear the term cryptocurrency anymore, because it's all going to be tokenized anyway.
Right.
So, if I get asked, does crypto have a future, or will it be the traditional assets? My answer is, well, in the future, there is not going to be a difference. It's all going to be the same, because everything will be tokenized.
And why do you, I know why that is, but maybe you can explain to the people watching, why will we see assets move to these blockchain tokens?
Well, blockchain is such a superior technology that, it makes the whole process of the financial industry so much leaner. Operations, clearing and settlement costs, that's still, a huge hassle today, right? And this technology simplifies those processes tremendously. And it makes, fractional investment possible, which doesn't exist today, right?
Right, so you can own 1/1,000,000th of 1%
of a house.
Of a house, right? Yeah,
exactly.
Which you can't. Which it would cost more in paperwork. To issue a title for that.
Exactly.
As opposed to putting it on the blockchain, you can do it like that for a fraction of a penny.
And that's why the blockchain is the big topic. It's not cryptos. Cryptos are here today, and I'm sure Bitcoin and Ether will stay. But eventually, it's blockchain-based assets. All big banks around the globe have blockchain projects. I just heard someone from Credit Suisse say a few weeks ago that Credit Suisse has 20 blockchain projects internally, even though Credit Suisse, publicly are not doing anything.
Correct.
So they're all getting ready for it, right?
Yeah, that is the future. My belief has been, like yours, that everything will move to the blockchain. And as that market gets bigger, of course, cryptocurrency, which is what my readers are interested in because they're investors, as that whole pie gets bigger, it can't help but make the crypto markets bigger as well. Anyway, that's my belief. So in Switzerland, central banks are now starting to get involved in crypto. Why do you think that is? Why do you think these old established banks are finally starting to realize, hey, this is something we need to offer our clients?
It's simple. It's the good old fear of missing out, right? They see, we had the first bank 3 years ago in Switzerland, Swissquote. It was a huge success for them. That year when they launched it, that was the biggest contribution to their net profit in that year. Today, a lot of the younger generation...
Can we back that up? It was the biggest contribution to their net profit?
I think that's if I remember correctly, that's what it was.
That's a startling stat.
Yeah, and they were really successful. It's a great. I have an account with them, and it's really cool. You have your Bitcoin along your shares, and you trade them just like other asset classes. It's the fear of missing out. They see this as an opportunity. Banks are struggling today. They're looking for new streams of revenue. This is a new revenue stream. Today. A lot of the younger generation have cryptos already, typically somewhere on an exchange, insecure. And, banks have always, the job of the bank has always been safeguard value, right? And cryptos is value. So for them, it's very natural to offer safeguarding custody of cryptocurrencies, right?
Yeah, I agree. And again, I'm so glad you brought up this point of fees. We're seeing in the United States trading fees go down to zero, right? People don't have to pay a commission anymore to buy and sell stock.
Robinhood, right?
Which is incredible.
Yeah.
So what I've been saying for the last 2 years is that American banks and brokers will embrace crypto and bring it to their clients because it is a brand new revenue stream. And they'll be able to charge commissions for it of the like that they haven't been able to charge it for 20 years.
Yeah.
I remember I started on Wall Street back in the 80s when the average commission was anywhere from 2.5% to 4%. So it was and you're still seeing those types of commissions take place in the crypto space. So there's a lot of money there for them to go after. I think we touched upon this. The question is, in the coming years, is it possible that all large banks, institutions will be involved in crypto/token assets? I think that's yes.
Yes. It's a question of time. Here in Switzerland, it's very real. I think in the next 2 to 3 years, every bank in Switzerland will have an offering. They just have to because their neighbors across the street do it, right? Internationally, interesting enough, the US seems to be a little bit behind This time we don't really see that many U.S. banks with an offering yet. I mean, there is Fidelity, there is Signature, and Silvergate Bank. You know, the big two crypto banks, but none of the big Wall Street banks have an offering yet. Even though we know that they all have projects, you know, behind the curtain. It probably has to do with regulation. You know, here in Switzerland, we are lucky that you know, the Swiss government is very pro blockchain and crypto. We're actually going to have a change of the corporate laws here in Switzerland, hopefully by the end of this year, that you know, you can use DLT technology for any type of contract. And that has made it very easy, you know, for a Swiss bank to get into the topics. That's also why we have the Crypto Valley here, right? It's why all these startups come here from all over the world. And we hope that this serves as an example for other countries. And I'm sure the U.S. will follow. You know, there is obviously, besides the bank, you know, that the crypto scene in the U.S. is big. We have lots of, you know, really cool startups like Tacit. And so the idea, the market is there, the market is evolving, and eventually the banks will follow. That's my guess.
Yeah, and so you say within 2 to 3 years, all the banks in Switzerland will have it. How long do you think that'll be? It'll take Europe, the rest of Europe, and then how long do you think before the US catches up?
I just read an article lately that from Germany that they're also expecting about 40 German banks to hop on the train. We see quite a bit of demand in Asia, obviously, Singapore and Hong Kong. Yeah.
So relatively soon.
Yeah.
Fantastic. An executive at Avalok says the partnership with AlgoTrader will allow banks to prepare for the coming wave of tokenization. I would say you would agree with that, correct?
Absolutely.
Okay. And we've talked about this already, that more banks will tap into tokenized assets such as real estate, art, and I think that every real estate title at some point will end up tokenized.
Yeah. I mean, real estate, you know, let's be honest, this is such an it's a huge market, but it's an extremely illiquid market.
Right.
And blockchain, you know, has the perfect solution for that, to make it more liquid. Now, you know, I doubt there is going to be traditional exchanges for real estate. We need to have other ways of trading these assets. And my take is that probably auctions are going to be predominant in the real estate market. So we're not going to see, you know, cryptos you can trade 24/7. Equities, you know, U.S. equities you trade from 8:30 in the morning to 4 o'clock. Why is that? Why is it only, you know, those 6.5 hours and not 24 hours? It's to condense the liquidity, right? The shorter the trading hours are, the more trading you have. Now, real estate is even more illiquid, so you want to make it even shorter. And an auction is basically a 0-hour trading window. You just have one auction per day or one auction per week. Okay,
very interesting. Something about real estate that I think will allow new forms of business to rise that I've been writing about is that, you know, there's so much equity tapped in real estate. And some of it's too small to actually go to a bank and lend against. But once you can tokenize that and you can make that cost of capital, accessing that capital, and that cost of using an asset and then borrowing against it so cheap, I think it'll open up a whole new world of kind of microfinance.
Yep. I totally agree. And I also believe, you know, right now, value and assets are sort of tied to banks, right? You can trade them through your bank. But I think value in general will be much more integrated into our daily lives, you know, in our phone, in our apps, you know, just whatever we do. I think over time you will be able to store and trade and exchange value in many more places than you can do today.
Yeah, I completely agree. Because of the infrastructure you and others are building right now, do you believe one day that let's speak about crypto specifically? Do you believe crypto one day will be $1 trillion asset class? Crypto
or tokenized assets?
I think we both agree tokenized assets will be a multi-trillion-dollar asset class. But crypto specifically, do you think that market could grow that large?
Well, we're not that far away, right?
Right.
Maybe a threefold of what we have right now.
Correct.
It is $1 trillion market, and with the next spike, that will probably happen. So I don't think we're very far away from that.
Okay. Yeah. And then the last question I have here is, in the U.S., again, a lot of the public doesn't realize how big the demand for crypto is from banks to be able to offer it to their customers. You are clearly an insider in this industry. Can you confirm that yes, demand is high, and yes, demand is increasing?
In the US or globally?
Globally.
Globally.
Yes.
Absolutely, to both of them. Yeah. I mean, we sit right in the middle of the crypto scene. So, people contact us, companies contact us, banks contact us. So we definitely see the demand. Yeah.
Oh, that's fantastic. Now, is there anything else that you feel important to share around this narrative of the fact that institutions, yes, are interested, money managers are interested, and that we are going to actually see more institutional capital flows come into this market? Is there anything else more you'd like to share about that?
Well, I think 2020 will be around, tokenization of real assets. We have said that already for 2019, and it didn't really happen. But I think this time it is actually going to happen. Here in Switzerland, we have the SDX exchange, which is part of the SIX group. We are actually the first ISV, so the first solution provider that will be on that platform. We had the first round trip order already, and that's a great sign. We need banks, but we also need the traditional national exchanges to adopt that technology. Okay. And I think this is happening now. I haven't really seen that last year. Yeah.
Okay, talk to me a little bit about that. What are you seeing that's leading you to believe that?
Well, so there is the SDX in the US. There is the BACT exchange, partially owned by the ICE exchange. We had in Germany the exchange in Stuttgart that launched a cryptocurrency exchange. This is actually quite amazing. A traditional stock exchange, a small one, launching a cryptocurrency exchange.
Right.
And it's quite amazing.
Yes. It really is.
In my eyes.
As we're filming this, it just came out overnight that the SEC shot down another Bitcoin ETF, and this was an ETF that was going to marry short-term treasuries with Bitcoin. Do you have an opinion on that? Do you think we even need a Bitcoin ETF in order for to see this for this asset to be easier for people to buy, or do you think that the brokers are just going to come in and just start offering it as a product offering the same way they offer you the ability to buy shares in Apple?
I think the sell side will find ways around that. I don't really understand what the problem is with the SEC and the ETFs. Right. Why there is no movement. But I think that doesn't stop the development in any way. Here in Switzerland, we have structured products around cryptocurrencies already, ETPs, and the derivatives markets. So the market is going to find ways around that, either with the US ETFs or not.
Right. It's what I believe as well. But it's wonderful to hear an industry insider such as yourself that speaks to these institutions every day, validating that. This is something I've kind of been a lone voice in the wilderness for the last several years. And my bet has always been bet on Wall Street's greed, right? And you bet on Wall Street's greed and you'll win. And Wall Street looks at this the crypto space as a honeypot of new revenue.
Look, there is lots of events we go to where you have technology providers and lawyers, and they talk about regulation. And who sits in the audience? it's the banks. What does that tell you? They're following that development and they're getting ready, right? Like even you know, often we get approached by banks and just for educational purposes, and they're so open to the information. You see that they want to learn and they see and you know they have to, right? The banks are not doing that well. You know, it hasn't been that great for them lately, and so this potential new revenue stream is very important for them.
Sure. Yeah, fantastic. Well, thank you so much for agreeing to join us and talk to us. I really do appreciate it. I know everybody at home that's going to be watching this is super appreciative of just how open and generous you've been with your time.
Thank you.
Thank you very much.
Pleasure.